Welcome back to Investing Talk podcast.
Good to be back.
Today, we're focusing on Worksport. They're a U.S.-based manufacturer kind of straddling automotive accessories and clean energy tech.
That's right. You shared some docs, an April 2025 analysis, a due diligence report from this year too, and a summary of recent stuff.
Yeah, and our goal here is, cut through the noise, get to the key insights.
Absolutely. These sources cover their products, the financials, market position, future prospects. They're a pretty good overview.
So we'll explore their move into clean energy, things like the SOLIS solar tonneau cover, the CR portable energy system.
And we'll look at that recent financial growth, plus the challenges and opportunities. It's a competitive space.
For sure. So let's unpack this. Maybe start with a quick overview. Who is Worksport?
Okay. So founded back in 2011, they started primarily with traditional tonneau covers for trucks.
Right.
But the strategy now is definitely shifting more towards hybrid and clean energy solutions. Think light trucks, the overlanding crowd.
People kitting out vehicles for off-grid travel, needing power.
Exactly. And also just the broader consumer goods market.
Okay. And the key products getting attention now.
Two main ones, Solis and Core. Solis is the solar tonneau cover. It's got integrated solar panels. They claim it could potentially add something like 2,050 miles of range for an EV truck per year. Big number.
Wow. And the market for that?
They estimate the market just for Solis is over $4 billion. Then there's CR, which is a portable energy system.
Renewable power station?
Pretty much, for trucks, off-grid use, that sort of thing.
So automotive accessories meets clean tech.
Got it. Now, you mentioned recent activity. There was something with the stock.
Yes. March 18th, 2025, they did a 1-for-10 reverse stock split.
Okay, why do companies usually do that?
Typically, it's to boost the share price, often to meet exchange listing requirements, like Nasdaq's minimum bid price.
So this doesn't change the company's actual value, but,
Yeah.
but it can cause short-term volatility. It signals the price was low before, which sometimes worries investors initially. It was likely about staying listed on Nasdaq.
Right. That's important context.
Okay.
Okay, let's get into the financials. How are they looking performance-wise?
Well, the revenue growth has been, frankly, pretty dramatic recently.
How dramatic?
They went from $1.5 million in revenue in 2023 to $8.5 million in 2024.
Whoa, that's, what, over 460% growth?
Yeah, 466% plus. And if you look just at Q3 2024, revenue is up 581% compared to Q3 the year before.
Okay.
They even hit $1 million in monthly revenue by the end of 2024.
So that big jump suggests their existing products, the non-solar ones presumably, were gaining traction, giving them some runway.
Seems like it. That core business momentum could really help as they launch these bigger clean energy plays.
Interesting. But what about the bottom line? Are they profitable?
Not yet. Net income, EPS, still negative, but they are aiming for cash flow positivity, targeting late 2025 for that.
Okay. And debt levels, cash on hand.
Their debt-to-asset ratio was quite conservative, 0.32, so not heavily leveraged. And they had about $6 million in cash reserves as of March 2025.
Gives them some breathing room.
A bit. And looking at Q4 2024 EPS, it was negative $1.14. But that actually beat expectations, which were closer to negative $1.40.
So better than expected and an improvement from the previous year.
Correct. It was negative $1.90 the year before. So moving in the right direction, but still losing money.
And they're projecting big growth next year, too.
They are. The projections for 2025 revenue are somewhere between $20 million and $34.5 million.
That seems quite ambitious, especially if Solis and Kerr aren't generating revenue yet. What's underpinning that forecast?
That's the key question, isn't it? It likely hinges heavily on successful, timely launches of Solis and Kerr and rapid market adoption.
Right. So strong top-line growth, but profitability is still a goal. What are the main strength-driving things?
Well, the rapid revenue growth we just talked about is definitely one. The partnership with Hyundai is potentially huge.
Oh, so?
Could open doors for factory integration, wider distribution, brand credibility. Plus, they have a lot of patents, over 170.
That's significant IP, provides a barrier to entry.
Potentially, yes. Or licensing opportunities down the road.
Okay, those are solid strengths. But the sources flag some concerns, some red flags.
They did. The big one is that the main event products, Solis and Core, are still pre-revenue. Everything hinges on their launch.
Makes sense.
And those revenue projections, hitting over $30 million next year, it's aggressive for products that haven't launched commercially.
High expectations.
Very. And then, as we mentioned, the reverse stock split. While it addressed a technical issue, it does point to prior struggles with the share price.
Okay, puts it in perspective.
Yeah.
Let's talk market dynamics. How are investors feeling and who are they up against?
The recent news suggests some optimism building. People seem focused on that Q2 certification timeline for Solus.
Getting it approved and ready to sell.
Exactly. And also, there's interest in COR for things like emergency power, off-grid uses, especially with, climate change driving demand for that sort of resilience.
Right, backup power is a growing market.
Mm.
And competition.
Competitively, they look okay, maybe even strong in their niche. The solar integrated truck cover idea, they might be first or very early there.
So traditional tonneau cover makers aren't really doing the solar thing yet.
Generally, no. Not with this level of integration. That could be their advantage.
Interesting. So looking forward, what could really boost Worksport and what are the biggest risks?
Catalysts. Definitely the Solus launch. That $4 billion addressable market is the headline number.
Huge potential if they capture even a small piece.
For sure. Then COR, getting certified, probably Q2 or Q3 2025. That's key for its rollout. And they're expanding their dealer network in the U.S. and Canada.
Getting the distribution ready.
Right. Saw 30% growth there early this year, apparently. On the flip side, risks. Well, execution is number one. Can they actually manufacture Solus and Heo reliably and at scale?
A classic challenge for new hardware.
Always. Also, if EV adoption slows down for some reason, that could dampen demand for Solus specifically.
Tied to the broader EV truck market.
Somewhat, yes.
Yeah.
And finally, just staying compliant with Nasdaq listing rules. They need to keep that share price healthy long term.
Okay. And any recent strategic moves mentioned?
Yeah, they partnered with a company called Patriot Automotive Technologies.
What's the goal there?
Seems to be about accelerating nationwide expansion, maybe leveraging Patriot's network and trying to build recurring revenue streams.
Makes sense.
And generally, their focus for 2025 is just drive revenue, build the brand. They also seem to feel the market isn't fully appreciating their fundamentals right now.
Common sentiment for companies in this phase. So wrapping this all together, what's the investment take here?
Given everything, it looks like a speculative situation. You could frame it as a buy or maybe a hold, depending on your risk tolerance.
High potential, but high risk.
Precisely. The growth potential from the clean energy pivot is clear. But the risks around launching these unproven products, hitting those ambitious targets, they're very real.
So watching those Q2 certifications is critical.
Absolutely crucial. That will be a major proof point or a stumbling block.
Okay. So what does this all mean for you, our listener? Worksport is definitely an interesting story, right? A company shifting into this high-growth, clean energy space.
That rapid revenue growth they've shown already, the partnerships like Hyundai, those are definitely points in their favor.
But, and it's a big but, the flagship products, Solus and Core, aren't making money yet. And that reverse split is a reminder of past hurdles. It really highlights the speculative nature here.
You absolutely need to watch their progress on getting those products certified and then scaling up manufacturing. Can they actually deliver?
The market for solar truck covers could be big, but execution is everything.
It really is.
So it brings up a question for you to consider. How much risk are you comfortable with? Especially with early-stage companies in clean energy, even if the tech looks cool and they have partners.
Keep a very close eye on what happens in Q2 and Q3 this year. That period should tell us a lot more about where Worksport is headed.
Definitely. Well, we hope this look at Worksport has been useful. If you found this valuable and want more like it, please do subscribe, like, and maybe leave a comment.
Your feedback helps us decide what to cover next.
Thanks for tuning in to Investing Talk Podcast.